Welcome to World News Update. Please subscribe and hit the bell icon for more breaking updates. Wall Street woke up to a shock. China was making bold financial moves that rattled the US dollar's throne. News tickers flashed red as China started buying gold at record levels and quietly selling off US government debt. China is signaling it wants out of the dollar-dominated system, and it's doing it with gold. Wall Street's confidence cracked as China's gold-buying spree and debt sell-off made everyone question the future of the dollar. The era of dollar dominance suddenly looked a lot less certain. The shock wasn't just a blip, it was a warning that the rules of global finance are changing. China's silent strike on the dollar is less drama, more impact. For months, China's central bank has been buying gold and selling US Treasury bonds, pushing gold reserves to record highs and cutting dollar holdings. Other BRICS nations are following, buying gold and selling dollars. When big players swap dollars for gold, demand for the dollar drops. This is a quiet but powerful vote of no confidence in the dollar's long-term stability. The global financial system is being rewritten, one gold bar at a time. This isn't just about gold, it's about a deepening US-China rivalry, fueled by tariffs and trade wars. In April 2025, the US slapped a 145% tariff on Chinese imports, aiming to protect American industries. China hit back with 125% tariffs on US goods, escalating the conflict. The result? A trade war that sent shockwaves through global markets, wiping out hundreds of billions in value. These tariffs made goods more expensive and disrupted supply chains worldwide. Meanwhile, the BRICS bloc is pushing to trade in their own currencies, bypassing the dollar entirely. Washington sees this as a direct threat, with former President Trump threatening 100% tariffs on any country moving away from the dollar. A brief 90-day truce in May 2025 lowered tariffs and sparked a market rally, but the peace is fragile. The core issues, China's ambitions and America's desire to defend the dollar, remain unresolved. The trade war is paused, not ended. Every move is watched by investors, knowing the next escalation could trigger another market meltdown. The world's two biggest economies are locked in a high-stakes standoff. The outcome will shape global trade for years to come. For now, uncertainty rules, and the fight for economic supremacy is far from over. The numbers tell the story. Gold prices soared to over $3,600 an ounce, up 38% in a year. When the US-China truce was announced, gold dipped and the dollar surged, showing just how sensitive markets are to every headline. China's steady sell-off of US Treasuries signals a long-term shift, not just a blip. Tariffs of 145% and 125% aren't just taxes, they're economic weapons, doubling the cost of trade. Even a temporary reduction in tariffs sparked a market rally, highlighting the damage high duties cause. These numbers aren't just for economists. They mean higher prices for consumers and more uncertainty for businesses. The global economy is on a roller coaster, with Washington and Beijing at the controls. Every announcement, every policy shift sends ripples through markets worldwide. Investors are watching closely, knowing fortunes can change in a single day. The message is clear, stability is gone, and volatility is the new normal. The world's financial system is more fragile than it looks, and the stakes have never been higher. In this new era, every number matters, and everyone is bracing for the next big swing. It's not just central banks, everyday investors are joining the gold rush. Fearing instability, people are pouring money into gold-backed ETFs, seeking safety from market chaos. In 2025, the SPDR Gold Shares ETF saw over $11 billion in new investments. iShares Gold Trust pulled in nearly $7 billion. These record inflows show a mainstream shift. Gold isn't just for doomsday preppers anymore. Gold's appeal is simple. It's a store of value that can't be printed or devalued by any government. As trade wars and currency fears grow, gold offers security that stocks and bonds can't match. This is a global phenomenon. Investors from Tokyo to Toronto are looking for a safe haven. The surge in gold demand reflects deep anxiety about the future of the financial system. People are voting with their wallets, choosing gold over uncertain currencies. It's not just a financial trend, it's a psychological shift. In uncertain times, gold is the ultimate insurance policy. The rush isn't slowing down, and it's changing the way the world thinks about money. So, what's next? The dollar's dominance is under threat as China and BRICS nations diversify into gold. If this trend continues, the US could face higher borrowing costs and a weaker dollar, hitting everything from mortgages to imports. The 90-day trade truce is just a pause. If talks fail, a new round of tariffs could trigger another global economic shock. In that scenario, expect gold to surge again as investors seek safety. Watch for signs, breakdowns in US-China talks, key economic data, and the price of gold. All are signals of what's coming. The Federal Reserve's moves on interest rates will also shape the dollar's fate. This story isn't just for Wall Street, it affects everyone. The dollar's stability has anchored the global economy for generations. Now, that anchor is being tested by China's gold strategy and rising trade tensions. Whether this leads to a gradual shift or a sudden crisis is unclear. But one thing's certain, the world is changing fast. Pay attention to where the smart money and the gold is going. The next chapter in global finance is being written right now, and your wallet is along for the ride.